Alhamdulillahi Rabbil Alamin. Assalatu wassalamu ala Rasulillah. Assalamualaikum everyone. We are here again to look at the investment arrangement under Islamic financial market. And earlier we were looking at the prospect of Ibrahim making an investment based on his capital saving of 50,000 ringgit, where he has two options to invest the money in the Sharia compliant offering. So investing the money in the Al-Bay universe, such as sale, lease, if you go into that direction, salam, istisna, and partnership. Or, given that Ibrahim is also, investing in the dual financial environment where he is exposed to the attraction of other conventional instruments. So his appetite, can be entirely based on money, or it can also be based on some religious value that will guide, or that will use as a guide, to steer his investment behavior. Otherwise, if he is someone who is completely going for the worldly investment, then he may want to invest in the interest-bearing instrument as well. So let us just see what is available in this particular framework. Number one, if he is looking for a halal option that is structured under Al-Bay universe, and under Al-Bay, as we see that it can be categorized as sale and lease, salam istisna, partnership, where we know that under this arrangement, the rule of no pay, no gain, the rule of the legal maxim al-gharam bil-ghunni will be in play, where the investment under Al-Bay provide no guarantees to the capital as well as to the profit. So there will be loss, and where there's a loss, then capital will decline. If there's profit, then capital will increase. So that would be the framework under which the investment based on Al-Bay will operate. Now, if he is if he wants his capital to be guaranteed under the Islamic or the Sharia banner, then the only option for him is to look for a qardu instrument where, his money will be used, but the contract of qardu will guarantee him his full capital at maturity. So whether or not there will be a charge onto the service rendered to guarantee the capital or not, but qardu will be a good prospect for any financial institution to use to attract people who want capital guarantee, which we can later look into some of this possibility later on. The haram option, of course, would be depositing the money in the interest-bearing deposit, or buying interest-bearing bond, government treasuries, or buying debentures. So these are the two options open to anybody, whether Muslim or non-Muslim. But for the Muslim, he will have, that particular appetite for spiritual satisfaction plus the profit satisfaction. For non-Muslim, maybe the spiritual satisfaction will be in the form of ethical investment. plus the profit as well. So we open these opportunities and option to all type of investors. But when we are looking at the Al-Bay option, the arrangement under Al-Bay, as we see earlier, is that the 50,000 ringgit or dollar would be placed under the Al-Bay system, where in the Al-Bay system, the trader or the merchant or the investor faces what we call business risk, right? So business risk is the potential losses that will have to be accepted by any investor when they are when they are making investment where the contract is a business contract. It is not a money lending contract. And we can see that the trader who is engaged in Al-Bay is investing their resources, which is the Al-Mal or capital, number one. And the trader will be exerting some kind of value or skill into the investment. This is kasab, work or an effort. And the investor will also be holding some kind of liability or demand over the goods sold, right, over the service delivered. So this is the basic concept in Islamic investment, where the investor who will be enjoying profit will deserve so because he or she has injected his capital resources or their capital resources and imputing skill and knowledge to further enhance the production, as well as holding liability over the goods and services rendered. So as we say, for the risk taken in Al-Bay, the trader or the merchant or the investor deserve to earn profit, if any. Now, if you look at the nature of the risk faced by the investor, this is meaning that the capital would be invested in Al-Bay, whether in sale. Sale, as I said earlier, is the investor can run it as a business. The investor can be the entrepreneur, where he is injecting $50,000 into the business, and he is also running the business, right? The business is retail wholesale, right? He can also be running the business by leasing the asset to the customer that is under ijara or leasing. Or he can, look at a mudarabah option, where somebody else will run the business and he will just be injecting capital into the business operation. So that will come under a mudarah structure, where the investor will become the Rabul Mal and the mudarib will be the running mate where to operate the business. Or the Ibrahim can become a regular investor, where he would be, investing in a pool of investor, and the business will be run by salaried people. That would be under a musharaka. So there's a lot of opportunity to see how the 50,000 ringgit or dollar is invested in Al-Bay. But one of the fundamental factor that we must put in mind is that all of these options have to face what we call business risk, right? So this is the risk that any businesses will be facing when they engage in their respective business operation, whether these are sale, leasing, or even production involving the conversion of input into output. So we can see here that at least in the sale business, we can see that the entrepreneur, or Mr. Ibrahim, if he wants to get into the sale business, he will be investing his own money, plus he will be running the business, right? So or the mudarib who is running the business based on mudarabah will be facing business risk. And what is business risk? So this is essentially a collection of risk that the trader or merchant will have to accept in view that they expect to make profit from the business venture. So the first one is, of course, market risk. These are potential loss from price fluctuation, from changes in demand and supply. So in a trade business, Ibrahim have no idea whether he can sell the goods at the expected price. So the market forces of demand and supply will be changing all the time, and price will go up and down. And how much price that he can secure from the customer will depend on how the market is behaving. So if the price is as expected, then he can make a good profit. But if the price is lower than cost, then he will make a loss. So that would be the risk of investing in al-bay' related business, which is market risk or price risk. And number two will be inventory risk. So this will be losses from goods not yet sold, because Ibrahim will be doing the marketing, and while doing the marketing, and there is no surety that people will buy, so that time or the holding period is actually inventory risk. And how long, the longer the holding period, then the more danger that Ibrahim will face, because this will involve inventory costs, warehousing, costing, logistic, and so on. And quality risk, these are potential losses from product obsolescence and damage that can cause depreciation of value. So again, the holding period is very critical, because a longer holding period will cause loss due to the fact that the product can no longer be fashionable or desired by customer. And this will be a bit of a problem to the merchant to ensure that these goods can be sold as soon as possible. And then lastly, we have opportunity loss. So meaning that capital is tied to the unsold inventory. So meaning that we have if the capital can generate profit elsewhere, and if this trading business is causing the goods to be stuck without any certainty of sale, then the profit will be foregone. So this is one of the risk that any businesses will be facing, because the business is essentially facing the opportunity cost of capital, and so it is not easy to invest the $50,000 because under al-bay' there is no guarantee on capital investment, what more on the profit. So we will allow profit to move up and down based on the market forces, and this is the morality of al-bay', where when business is taking risk, then we can say that there is integrity. There is integrity in the Islamic finance business. So risk taking is one of the symbol of integrity of the Islamic finance business. Otherwise, if the Islamic finance business is to be run by giving capital guarantee and profit guarantee, so that will somehow mirror image the interest bearing or riba based investment that is plentiful in the financial marketplace. Okay guys, thank you. I'll see you again. Assalamualaikum warahmatullahi wabarakatuh.